and welcome to Mint Videos. I'm here to interview Mr. Tamal Bandyopadhyay, who's the expert on all affairs monetary at Mint. So, Tamal, why didn't the Reserve Bank governor do anything this time? He's done practically nothing, right?
He did cut SLR by 1%.
Is it going to have any impact at all?
No. It's. I think he wanted to do the best of policy in the worst of times. So it's a feel-good factor.
Yeah.
Academically, yes, about close to 70,000 odd crore will be released into the system, but that's only academically, because banking system has close to 30% SLR,
Right.
Bond holding.
Yes.
So it's already 6 percentage point more.
Right.
How does really matter whether you bring it down by 1 percentage
So
point
why
more?
do it?
Well, one way of looking at it, possibly it is sending a strong signal to the fiscal authorities that look, you be careful. I am here to monitor you. You are not doing anything, so I am cutting banks SLR. So banks
Right.
will not be very excited to buy your bonds. There will not be. But I don't think that is correct, because on the one hand you are cutting SLR, on the other hand you are doing OMOs. So it will not have any impact on bond prices. Today it happened, but it will taper off. So government borrowing will go through. Second part could be, it's also creating a cushion for more aggressive action in the foreign exchange market in future if that happens, because so far Reserve Bank of India mostly active in the forward markets, not in the spot market, because it can't afford rupee to get out of the system. But in future, if you need, you can be a little more aggressive, because you have that 70,000 crore cushion. And of course those banks which are on the marginal cases, they will get some relief. You can have now bonds to give to Reserve Bank of India to borrow money from its repo window.
So it's a signal that we are in favor of softening policy, but it's government policy which is holding us back, right?
Yeah, that is true, but I am not very sure whether there is any signal for softening policy. If you ask me, more important than the CRR cut, the clue which I am taking away is this projection of inflation is being raised. Now, if you have raised your projection from 6.5% to 7%, which means the chances of the possibilities of rate cut even in future,
right.
It's dimmer now. I am sure all the analysts now will go back to the drawing book and rework whether it's 50 basis point cut or 25 basis point cut by the end of the year.
Right.
So unless something dramatic happens on the fiscal front,
right,
or the inflation expectations go down dramatically, the possibilities of future rate cuts at this point of time now it's very dim.
It's
Not
also,
in this year at least.
It's also an indication that monetary policy can do little in such a situation, right?
Yeah.
You have to have fiscal policy going hand in hand with monetary policy.
Absolutely.
That's what the Reserve Bank has been saying for quite some time,
Absolutely.
right? But the government is not listening to it.
Yes.
In such a situation, can the Reserve Bank do anything?
I don't think it can do anything. In fact, if you have read, I'm sure you have, yesterday's macroeconomic review, it's categorically said that we have done our part. We had front-loaded the rate cut by 50 basis point deep cut in April, but government has done nothing.
Okay, but now the Reserve Bank has been telling the government to lower the fiscal deficit, right?
Yeah.
But lowering the fiscal deficit would mean lowering consumption, right? Because they want subsidies to be cut, which would mean even lower growth, right? So would it not therefore impact growth even more at a time when growth is already so low?
No, I would think it's a short term and long term that the trade-off between that. For instance, you need to increase petrol, diesel price and kerosene and LPG price. Will it have impact on inflation? Of course it will have impact.
Yes.
But should that prevent you from raising? No, because again it's a sustainable inflation you are talking about. So we are also talking about sustainable growth, whatever that means.
Yes.
So short term there will be pain. You need to focus more on capital expenditure. You need to cut your revenue expenditure. You need to take a relook at the entire subsidy structure. You need to raise all this
Right.
your administered prices, so on and so forth. There will be short term pain, but medium term you can have a sustainably high growth and sustainably low inflation.
The Reserve Bank has said that the sustainable rate of growth is 7.5%, right? Earlier in an interview to Wall Street they had said 7%. Now he's revised it upwards to 7.5%. But even now with 6.5% growth rate which they are predicting, the inflation rate which they are projecting is 7%.
Right.
So does it mean really that 7% is what they are taking as a sustainable rate of inflation? Because if you look at it that way, shouldn't therefore the growth rate, the sustainable growth rate be even lower?
and inflation could be even higher. So you see,
Yes.
it's always it's not constant. In 3 months they have changed it
Yes.
between April and now. So who knows? In again there'll be some changes. So
Yes,
I think
yes.
it's a very fluid situation. Both domestic circumstances, particularly monsoon, is the villain of the joker of the
Yeah.
pack, and of course you have the global scenario. It's continue to be uncertain. So I think we are going through a very uncertain time. So nothing is constant. Constant thing is for the time being high inflation and low growth.
That
Yeah.
brings us to the end of this interview. All things considered, I would think that the conclusion is that the RBI has only so much power and monetary policy can only go so far. The Reserve Bank of India has already told the government that the ball is firmly in your court. It's now up to the government to react. Without the government reacting, the RBI can't do much. That's it. Thank you.